In this chapter, we're going to talk about everybody's favorite subject, taxation. Oh yes, the old taxes. You know, some people, they don't like to pay their taxes at all. Then there's other people, they don't have a problem paying their taxes. Well, for our purposes today, we would like to talk about the verbiage that's going to be on your test and how confusing it really is with all the wording they use. Because we need to know, is it taxed? Is it tax-free? Is it pre-tax dollars? Is it tax deductible? Is it not tax deductible? Is it after-tax dollars? Is it deductible as a business expense, taxable to the business, blah, blah, blah. So here's a little chart for you. Focus on who is paying the premium to know how a benefit would get taxed. So first, let's talk about a key person policy. The business owner pays the premium, but the business owner would get the benefit. On a buy-sell agreement, it's business partners paying the premium, but a business partner would get the benefit also. On a business overhead expense policy, it's the employer, the business owner, paying the premium, but the business itself gets the benefit. Individual life insurance, the individual pays the premium and the beneficiary gets the benefit. Group life, anything in excess of $50,000, the employee is taxed on the premiums. No, you are not taxed on your health benefits. Very important that you know that. Now, on individual disability policies, the individual pays the premium, and it's the individual that would get the benefit. On group disability, if the employer pays the premium, then the employee is getting the benefit. However, if the employee pays a premium, then the employee still gets the benefit. Now, sometimes they split it, so you just need to know who's paying which part of the premium to know which part of the benefit is taxed. All right, so let's look at individual disability. Let's say here that we have Bob. Bob purchases a disability policy, pays the premium. Now, if Bob here, he would be the one to get the benefit. That benefit is always tax-free to Bob. Now, is the IRS going to let Bob double dip? No, they will not. So the premiums Bob paid are not tax deductible. Let's look at a key person policy. Bob's the business owner. Brad is his key person. Let's say Brad dies or becomes disabled. Well, Bob gets the benefit from that policy, and that benefit for Bob is always going to be tax-free. Once again, is the IRS going to let him double dip? No. So the premiums he paid are not deductible as a business expense. Now let's look at a buy-sell agreement. This is business partners on a buy-sell agreement. We got Bob and we got Bill are business partners, and they pay the premium on their policy. Let's say that Bill dies or becomes disabled. Well, then Bob is going to be the one that gets the benefit from that policy, and that benefit will be tax-free to Bob. Is the IRS going to let him double dip? No. So those premiums they paid are not tax deductible as a business expense. Now let's look at a different one here. This one, Bob is the business owner and he owns a factory. He's wanting to purchase a business overhead expense policy so that if Bob became disabled, it would cover the overhead expenses of his business, his rent, salaries, lease agreements, utilities, would keep the lights on and the doors open. So Bob pays the premium on that, but the business gets the benefit. So Bob can deduct the premiums as a business expense, but any benefit to the business is taxable. All right, so that is going to cover all of your taxation needs. Make sure you know who is paying the premium to know how a benefit is taxed. We'll see you on the next video.